Welcome. My name is David Gallner. I'm the founder and CEO of Legacy Financial Strategies, and we've been serving pre-retirees and retirees for over 41 years. Legacy Financial Strategy is a registered investment advisory firm, and our taglines: we help you enjoy and protect your nest egg. We show people how to protect their assets from catastrophic illness and Medicaid spend down. We show people how to reduce all types of taxes. We show people how to avoid probate, and we show people how to get a competitive rate of return on their money. What we're going to talk about now is taxes, and we're going to talk about distribution planning. One of the gentlemen I had on my radio program, which is posted on leavealegacy.com, leavealegacy.com, is a guy named David Royer. He's American's favorite IRA expert. He wrote a book called The Top 10 IRA Mistakes and How to Avoid Them. It's important, folks, that you deal with an expert who is qualified in this area. Many people may be great financial advisors, insurance people, broker people, lawyers, CPAs, but you must have specialized knowledge in this. And we're going to be talking about a publication called Publication 590. It's 110 pages long. You can get it toll-free by calling the government at 800-829-1040 or go to irs.gov, but I don't think most of you people want to read this unless you have trouble sleeping at night. But what it talks about is minimizing taxes to your IRAs. And one of the mistakes he talks about in here is not having a custodian that allows the stretch, or a multi-generation, or a legacy stretch. And if you never heard that before, chances are your custodial account doesn't have it, or your broker or insurance person would have told you about it. They wouldn't have kept it a secret on there. But folks, it allows heirs, your children, grandchildren, to take distributions upon your death. Instead of taking a lump sum or over 5 years, or take them as rapidly as the IRA holder is, they can take it over their life expectancy. For example, when you die, let's say your son's 50 years of age, instead of emptying it out in 5 years, they could take it maybe a little bit over 33 years. Now, they could take out more, but they're not forced to take it out. It's important that you have two documents. He talks about in the book as having the custodian agreement and the beneficiary agreement. That's right. Many institutions lose those documents. So you want to have a copy of your beneficiary agreement and your custodian. Now, in this book, he talks about these 10 mistakes. One of them is not taking the requirement minimum distributions. That's when you're 7.5, you're required to take a certain amount out every year. So when you reach 7.5, technically it's April 1st of the following year, but if you do that, you got to take 2 out. If you don't take the proper amount out, guess what? The IRS will charge you a 50% penalty. So let's say you're required to take out $10,000. 50% of $10,000 is $5,000, plus you got to pay the income tax on it. You could actually be paying more to the IRS than you're actually getting. So that's mistake number one. You must take out the proper amount. Also, it's written in very easy to understandable language. You think when it comes to taxes, it's going to be very, very complicated. In fact, it's not. So let me tell you about some of the other topics that's in this book. It talks about not taking advantage of the stretch option, which I already talked about. Not properly designating beneficiaries. Very, very important. Page 38 of this publication 590 talks about the separate account rule. Most people don't know about that. You want, if you have 3 children, folks, you want each of them to be able to take distributions based on their own life expectancy, not the oldest child. So you must have that provision, separate account. Putting too much money at risk. If you put too much money at risk, you won't have to worry about the stretch. You won't have any. Overpaying fees in loads on 401ks, 403bs. Huge on that. Not rolling a 401k, 403 plans over to an IRA. Many people are retired out there and have 401ks and they haven't rolled over, and that usually loses the stretch. It could cost your heirs tens of thousands of dollars. And one thing we do at our firm, Legacy Financial Strategies, is we usually give a complimentary consultation, and we will do an analysis of your money to talk about the fees, etc. But we'll also do a calculation to show you the potential loss if you don't have the proper custodian lined up on that. Too many retirement accounts, too confusing out there. So if you'd like to get a copy of this book, call Legacy Financial Strategies, toll free at 800-264-4963, and we'll tell you how you can get a copy of this book at absolutely no charge to you. Thanks for tuning in.